1987 might be known for many things. The movie Wall Street came out, I was born, and of course the flash crash happened on the markets. And many people are talking about this now in 2024. Will we follow a similar trajectory of recovery, or are we seeing something totally different? In today's video, we'll actually look at the data surrounding this particular historical event over the last week and why you might want to think about it a little bit differently to what you may see in the media. The other thing is, will we hit the bear level into the PPI and CPI numbers? They're coming in less than 48 hours, and of course we need to discuss. With Nvidia at the options call wall we discussed in our Monday open, and gold potentially looking for a big breakout, there's a lot of opportunities in these markets. Stocks, commodities, and cryptos, let's discuss them all together right now, because this market is getting exciting. Well, welcome back everyone to The Daily Show. My name is Tom, and in today's video, we'll discuss everything from the macro to the lead indicators to the hottest charts. As we suspected, Nvidia came out very strongly over the last 24 hours, smashing straight into a key resistance level that we need to talk about from an options perspective. But will this market actually make it to the bear zone this week? Well, we'll go through that in a moment, but let's discuss the 1987 analog. Courtesy of Jeffrey A. Hirsch here over on X, we basically see that the markets are doing two different things. In 1987, we saw strength over the August and September-October period until crashing really quickly in the back half of the year. But this time around, we've fallen a little bit earlier. And as we've been discussing on this channel for quite some time, we believe we're in two types of concentrated markets, the 1960s period and of course the 1990s period, with many similarities in both markets that luckily have not been discussed as much as some of the other ones that are going out there. Now, 1968 was an interesting year because in both cases, we actually have people dropping out of the US election. And in both cases, we also have a sell-off in the mid-July correction into the August period. And of course, Dem conventions were in the August period in both cases as well. Now, in this case, the markets were able to rally all the way up until the election and then past it, falling after the December period. And this will be a very interesting narrative to actually start to watch on the channel. And of course, we'll see whether we can move into that. But in most election years, that bucks the trend to what most people expect. Most election years actually tend to have September-October weakness and strength into, of course, November and December. So which one is it? Well, luckily, Wayne Whaley, who we've focused a little bit on the channel with some great stats before, has a good one that we'll share today. But let's talk interest rate cuts first. Because as we know, interest rate cuts are most likely coming in September, and the way that the Federal Reserve cuts will be very important. Now, in a non-recessionary interest rate cut environment, where we don't go into recession over the next 12 months, markets have tended to flash crash into the cut itself, fall a little bit after the cut itself, and then end up going up. Now, this is a very interesting period because, of course, we expect the interest rate cut to come in, of course, September. Now, the size of the cut may be important, but remember, there's this secondary weakness that tends to come through, and this is the important factor in a non-recession period. Regardless, the next 3 months in markets is going to be so important. Following how the market is actually interpreting these figures will be paramount to all of our investor and trading success. So make sure to subscribe if you're interested in that. But it's also the speed at which these cut. 50 basis points would be really bad. And that would show that the Fed is completely freaking out. They're seeing something that maybe not even the market is seeing right now. And in both 50 basis point cuts of the last kind of 2 decades, we've seen effectively recessions and huge sell-offs in the markets. Now, I polled you guys, and 50% of you pretty much thought that 25 basis point cut would happen, and 50% of you thought a 50 basis point would happen. I'm kind of going with the 25 basis point. I think it makes the most amount of sense. A 50 would not even achieve what the Federal Reserve wants. And these are the kind of periods that I think we need to start looking at more in the markets for synergies. 1998, 1960s, and obviously 2019. Why? Because they make the most amount of sense. We've got to suck everybody in. Remember, we talk a lot about this channel. We do believe a recession is coming, but we think that timing is everything. And of course, you've got to be very, very careful about falling into the trap of Wall Street giving you fear in the wrong areas rather than the right ones. Remember, we talk about the pillars on this channel a little bit: debt, population increase, and innovation. And in this case, we have innovation driving this market. In the case of AI, we've got population increase, generally around the world at the moment, thanks to immigration mostly. And of course, debt is spiraling out of control. So as long as it's growing, it's not really a concern. When the cracks start to show, which they are in some sectors, particularly the commercial property market, that's what we start to need to pay attention to. Let's move over here to the recession concepts. Have some recessions ended up in very bullish markets before it's crashed? Well, the answer is yes. And although there are a lot of squiggly lines here, you'll notice again the speed at which this market moves off, especially if it starts going ballistic over the next 12-month period. All of those ballistic ones have ended in recession. This is an important factor that most people are missing. So it's great to have you on board because you guys, you're powered by much better information than most retail traders like us out there. Let's talk Wayne Whaley's data. What fantastic data here. Awesome pickup, Wayne. What he's done is he's gone through January all the way to July, and he said if we're over 10%, so greater than 10%, then what effectively we're seeing on the markets is an interesting run when we're 2 weeks weak in August. It's happened a few times. Again, notably some interesting areas here. 1998 showing up. Obviously, we've also got the 67 period showing up. So again, in that kind of area, and 2019. So very interesting areas. But what ends up occurring is when you buy it. If you buy it between August 14th to January 31st, you would have a 14 win to 2 loss track record. If you bought from September 23rd to October 2nd, notice that's after the rate cuts expected, when we expect a dipping period, we would have a 6 and 10. So that is only 6 times bullish. The most negative double dip area seems to be around that date. Fantastic work here, I think, and really, really worthwhile paying attention to that. And then, of course, if we bought from October 27th to the January 20th period, we would be 16-0 in similar scenarios. So what he's basically saying is that it looks like the data is still bullish. It looks like there could be a secondary dip in the September period, and it all lines up together. And this is awesome, especially if that ends up being not what most people are talking about on the internet. Speaking of what everyone will be talking about in just a few days, CPI. Goldman Sachs here, courtesy of Mike Zaccardi, coming out with their forecast. They believe that we're going to see a 0.17% increase in the overall CPI PCE. And of course, they also expect that in general, we're going to see used cars continue to drop through a little bit here. Now, I think that's an important one because basically things are coming back into some form of uniformity. The watch market is falling, the collectibles market is falling, and of course, used cars are tanking, which is great news if you need to buy a car and really bad news if you bought a bunch of new cars over the last couple of years. So hopefully you're somebody that's held off, maybe buying that supercar or more importantly, buying that kind of mid-range Mercedes or German car in particular, because those ones are unfortunately tanking in the markets right now. Let's have a look at the July CPI forecast. I post this over on our X account. I'll also get the JP Morgan game plan as well over the next 24 hours and hopefully be able to share that over on X. So make sure to follow there for that. And you can see here that most of them are coming in with around headline CPI being about 0.2% with a 3% over year on year. So this is the general expectation. All of them are the same. As always with these numbers, you don't really want to predict it. Instead, you want to see if the price action hits key levels. And we do have some key levels on the US 500 coming up. Now, a lot of people are concerned about the commercial market. You guys have said to me many, many times, Tom, why are you not covering the commercial market? Look, I know it's bad, but I also know that this is not usually the one that breaks the camel's back, the straw that breaks the camel's back. The commercial market is a huge market, don't get me wrong, but it is not the predominant debt that we are looking at when we're talking about a massive crash. It's a problem. It certainly is starting to rise, and you can see here that the delinquencies are now at a point that we haven't seen since really the global financial crisis, and we will continue to track it. But I thought I'd bring that up because the commercial market is still a problem. It's getting worse, and of course it is there. Macro charts, chart over here did go to the oversold as we thought, extreme numbers. Of course, it's starting to see a bit of a pickup now, and CTAs have also started to pick up the market. So we'll talk about that because, of course, the algorithms are important. If they start tracking the market towards the upside and start adding in, then we want to be on board with the algorithms ideally. Another one that we had in a couple of our videos recently has been the 12-month performance of the S&P 500 into the last 12 business cycle peaks. Now, this is really important because we usually see the market failing a lot more at this point, weakening off, finding weakness, kind of starting to drop off. That is not what happened as of May 2024. And of course, even now, it really has only fallen a little bit. So it looks like we're most likely not following the same track record as a market would be if it's failing into, complete weakness. Another point that I did think was interesting, we'll bring it up in our next video, is when we tend to see volatility like we have over the last week, it means that growth is slowing. So those incredible boost gains that we had over the last 12, 18 months, they are likely to slow down a little bit. So the market may become more volatile, but the overall bull sentiment should be a little bit weaker. We'll see whether that does end up happening. This week is marked by really three main things. We've got the Chinese market coming through. We've got a few defensive stocks such as Walmart and Cisco and others. And we know that, of course, we need to be paying attention still to the large moves of the options market. So here are some of the big ones and the expectations of how much the implied movement is. Barber's coming in at a plus minus 8%. Whaley Brett Thrust, I thought I'd bring it up. Never lose sight of this one. It has a 100% track record, or very close to, in terms of being bullish over the next 6-month period. And as we thought, we usually see around 2 to 3 weeks of weakness, which we've checkmarked so far since this read came through. And of course, we expect that overall, over the next 9-month period, we're pretty much going to see a very strong market recovery-wise and everything else. What about dark pool liquidity? Well, dark pool liquidity, it's been interesting. This is SOX, Direxon Semiconductor 3X Bear, and we saw a few people probably entering into some short semiconductors in recent times. They probably took some profit here, you would have to think, the number one trade over the last 2 years, and then it's come back down, it's testing this area. Now, we know this is an important area, so if this gets taken, there's a good chance that semiconductors will go up, and of course, that we're basically through the biggest problem for semis. So we'll look at that in a moment. VOT, Vanguard Mid-Cap Growth, couple of large trades coming in here. Almost symbolic, actually, of sells, because we do have a sell over here, you would have to think, with the market falling down. And then we've got another big trade happening at the same level. The last time we saw trades like this, they were huge buys very, very long time ago. You'll see that goes all the way back to 2008. So these are huge trades. They could be taking profit. Very difficult to really get too much from that chart, but I thought I'd bring it in just so you can see the types of things we look for. ProShares short S&P 500, another large trade as well being defended around here. It looks like people are kind of maybe opening hedges towards the short, and again, we're getting close to that level on the S&P. It doesn't mean it's going to crash or anything. Certainly could be there though from the dark pool. Another way of looking at it though would be that maybe somebody thought it was going to get worse. They're closing off their positions and they're just saying, you know what? Well, we tried, didn't really work out. We'll go to the next one. Last 24 hours was the strongest in the market for gold. So the gold sector did really well. If you're a long-time viewer of this channel, you know I love gold. Gold is doing amazing. We've got $3,000 an ounce as our gold target here over the next 12 to 16 months. And we've had that for quite some time. And gold's been one of the best performers this year. So great to see it there. Semis did well, technology did well, utilities, another sector we like at the moment, did well, and energy came out swinging for the fences. So it was pretty nice the last 24 hours. A lot of the sectors we've been discussing were the best. The last 5 days now is semiconductors, gold, technology, energy, and financials. Now, just a quick repeat on this. Financials do not usually go up in a market that is tanking, a market that is fearful, a market that is scared. We must watch ITB and KRE because, of course, they've weakened a little bit here, but they've been incredibly strong over the last 2 to 3 months. So something to note. Now, another thing was the 9 days. We are now in day 7 of what we expect to be kind of this choppy consolidation. We're probably going to enter into day 8 with this choppy consolidation. Hopefully, we'll be able to manage to fill the gap, which sits at 54.40. And just a reminder, this has happened the last 5 times we've dropped off pretty quickly, and only one of them ended up in a further bearish sell. So there's 1, 2, 3 here, 4, and 5. An interesting observation. A lot of you also going on about the drop off in volume. I encourage everyone go through the last 10, 15 drops, and you will notice that this is not necessarily an edge giver. We love tracking volume. We use, of course, volume profiles all the time and everything. And we know that the most traded zone and most interesting area right now is 54.40. Not only is it a huge trade area, but it's also the 20-day EMA. It's the last major bear area. There's going to be some calls on it and quite a few other things. We've also got anchored VWAP sitting around similar zones. So if you notice, the market did absolutely nothing over the last 24 hours. It went up, down, and all around, and a lot of people are speculating it's a sell. I would say at this stage, we're not at a level of really interest. We're at a level where it looks more than likely the market will push towards at least the one-day expected options move high or even the 54.40, which also happens to be the golden pocket, the 61.8 golden fib ratio sell zone. So there's a lot going on. It looks like the markets currently are bullish. Let's have a look at the options levels and see how we turned. We know that 5400 is a big strike, and the 0DTs agree with that. Over the Tuesday session, we are expected to possibly hit the 5400 zone. Why? Because that's where all the calls, it's like acting like a magnet to it. It'd be hard pressed to get over that point. And as we lead into the OPEX, of course, which is the 16th here, you'll notice that we do get quite a lot of puts that are sitting also around 5400. So this week is heavily geared towards the negative gamma side. If the market does get roiled up by CPI, it could create a waterfall event. It's going to be a big 48 hours. Let's see what this number comes in at, because I don't even know how the market's going to interpret it yet. But if we hit 5400, 5440 like we currently kind of suspect on this market, it does give us levels to create structural zone to maybe get a great day trade in. From an investor, you guys just want it through that last high. Get it above kind of like the 54, 70, 80 zone. It'll be good times. Everything's starting to look really good. Pullbacks to be met by bull demand, etc., etc. SPX versus CTAs. We saw CTAs drive up the markets after absolutely freaking out. This, of course, pretty much algorithms out there in the markets. And they are momentum funds. They dropped a little bit. This would have been taken as of Thursday or Friday's number last week. So you can see here it's a bit delayed, but again, nice recovery off the lows. Like to see that start to follow through in the next couple of videos where we update this chart. Brent saw a little bit of recovery. Great movement on oil itself. Congratulations on any traders that got oil. A lot of you in the live stream had oil to the long side. You've done amazingly well. It's funny when everyone hates something and it shows great technical analysis structure. Remember, number one reason we like to get into things isn't the data, isn't the macro. That helps us to get confidence and know our stats. But ultimately, the TA gives us the edge. The TA gives us the entry points. The TA gives us the replication. And of course, that one was straight out of our day trading masterclass course. Complete replication. A lot of people got it. Congrats to you guys. Copper starting to look very interesting over the last 24 hours. We'll look at that. We spoke about it in our Monday live stream. Gold improving here on the CTAs, fantastic to see. Silver also improving on the CTAs. And then, of course, we come over to NVIDIA. Now, NVIDIA, we know, has problems around 110 or 111. Why? Because that's where it moves from a negative gamma situation into a positive gamma situation. And we know there is a lot of expiration of options right around this zone. So this will be a big point to crack for NVIDIA. If it gets through 111, you're kind of looking at a 117. And it's been a very nice recovery so far. But remember, NVIDIA is run a lot of the time by retail sentiment. So when it's jumping up, it can also be a bit of a trap. Now, I like NVIDIA. We spoke about it a lot. 95, 92 last week was a bit of a blessing in terms of being able to get those prices. But yeah, we're now at firmly that resistance, which we'll look at in a moment. What about for Tesla? Well, it's struggling around the 200 zone. So we know 200 to 205. There's a lot of calls sitting there. We move from, again, negative gamma, we're kind of almost neutral on the gamma side, to positive gamma. So if Tesla is able to break out to the upside, it could be a great coil, and we'll look at that in a moment. Let's get into the charts now. S&P 500 versus central banks. Central banks pulled a little bit of liquidity through the start of this week so far, but still very bullish. So that's bullish on the side of the bulls. The VIX dropped to 20 and held it, so it came up a little bit there over the last 24 hours. Not much read there. And yields, of course, have found their base at 3.8. And more importantly, we're still inverted on the yield curve. So remember to put your US 2Y versus US 10Y and 3-month versus 10Y. And you'll notice that while we did invert, we are still holding at a 1.027. And we have to expect now that it's only a matter of time before we do uninvert. And that puts us on the clock. So remember, the clock to recession will be on at that point. We'll have a special when it does eventually occur. Properly, not just for 0.2 of a second. Treasuries, therefore, are bouncing around this area. This is exactly where we know there are huge amounts of dark pool liquidity. So there's no doubt that a lot of Wall Street have set big positions here for long-term holds, Warren Buffett being one of them. He likes his treasuries, and of course, he's been cashing up for a while now. Copper, strong daily close. We mentioned that this was flying in the previous market. It certainly did. Strong daily close above 407 opens up pullbacks to 402, where we may see some strong buying. Now, of course, this is trying to buy the dip a little bit here, and you can see it's also an inverse head and shoulders. And if you take that completion, it points to 4.24. So realistically, if we take kind of the A area and we make it out, it points up to here. And this could be a pretty interesting trade. So is 4.02 the buy area? Are we going to see strength here? A lot of people probably starting to look at metals differently over the last 24 hours. They're moving up in a big way. They look pretty sweet. US dollar, nothing. Still weak. Still not that great. Yeah, it's still falling. So at this point, we're still looking for it to move up to 103.60 to 80. Hopefully get into that bear zone. Maybe find some sells there, but nothing much going on. What about gold? Beautiful moves. Look at this thing. Absolutely pressing that top end. We love gold. We love the accumulation it's been in. A lot of people think that it's been weak or something. This is what happens. You get these huge thrusts in markets. They've got to have a pullback. In this case, it's the best type of pullback, what we call a pit, a pullback in time. Remember, time is our most valuable asset. And I thank you, and we all thank you here at FX Evolution for watching this daily show every single time and spending your time to learn more about markets. And hopefully you do learn a lot. I've read so many great comments, so many success stories over the last couple of years. Been fantastic from you guys. So thank you for the thumbs up and the comments you do leave and the subscriptions, etc. But gold has been doing fantastically for us. We love gold on the channel and we liked what we saw the last couple of weeks and we're hoping for a new breakout. So at this stage, yeah, it could be just a day or two away. Maybe it's waiting for PPI and CPI and we might be going towards maybe even 2,600 in the next thrust or more. Silver gold ratio, as we mentioned, is cheap. So we're looking for silver gold to eventually return back to 0.015. This should force silver to the right kind of ratio zone. And we've been seeing some strength, actually excellent buy here over the last 24 hours, right when it came down to this super bull switch zone. Daily closed pretty strongly. Surprised to see silver actually finding any weakness here in the beginning of the session, down 0.85, but I'd like to see it hold above this low. So even this low would be good. So maybe it can retest like that. That is a possibility. But for now, silver is probably the most exciting other than gold in the metals universe. This is something that could really get up to like the 2880s, 29s, and do it pretty quickly. A lot of people calling this a flag. Of course, the base of last week, it's up 5% still. It's doing quite nicely off that level we discussed. US oil broke through 79 a barrel. You have to think now it's fairly strong. And I've put in here 77 as a potential buy zone. So just where we were over the last 24 hours, but things have switched. It's made it's made great room into the upside. And we know that there's quite a lot of trade around this 77 zone. So yeah, interesting point here for oil. Looks really strong on the charts. And it's also feeding through to oil stocks starting to improve, which has been one that we've focused on. You can see it rejected over the last 24 hours, then found super strength. So a momentum-based stock buyer might be looking at a 90.39 breach out and then saying, well, you know what? That was such strong buying off that drop that we're going to try to get that thing back up to, at minimum, probably a 93.50. Oil stocks certainly looking better than they were. Now let's move over to Tesla. You can see the coil here, guys. Not quite the beautiful coil that we had over in this area. I'm looking for unusual dark pool volume. I'll update you if I get one. I'm hoping to see one post PPI and CPI, because what a lot of people don't understand is this is where Wall Street enters their trades a lot of the time. They use these scary news announcements to get liquidity, and liquidity allows them to build positions. So we will be watching. But at this stage, we're looking for a 203 breakout from the TA. That will put us into positive gamma territory, and it could get us started to a 220 at minimum move. So we're looking strongly at the upside still, although at the moment the market is kind of weak on Tesla, holding around that just kind of neutral zone of 180 to 200. Nvidia, big move, 111. We knew this was going to be a resistance because we saw it on the calls. It's also the daily 20. And you can see how important this zone is. 1, 2, 3, 4, 5, 6. Many dynamic supports and dynamic resistances. This is clearly one of the most important indicators on the chart. The call wall is here. No surprises that everything lines up perfectly on these markets. Yeah, that's often how they do it. And I think post PPI and CPI will have a bit of an idea. If Nvidia does break out, we're looking for 117. So markets looking a bit better on the Nvidia side, but as we know, retail traders love getting trapped in this stock. Things are improving. Semiconductors also managed to get back to that role reversal area. So they finally did it. You can see here semiconductors moving up to where the flash crash began. And we're basically back at that key resistance before PPI and CPI. So we know 200 was a mega buy. And just to give you an idea, the percentage from that point last week, 14.23%. Nothing to sniff at. That is a very good return, but still hasn't breached like a higher high or anything. So it's still technically in a downward trend on those timeframes. Just a great buy zone at the 200. Let's have a look at Tencent. Before earnings, it's getting hyper, 378. Is this foreshadowing a good earnings from 700? I don't know. Chinese stocks, very exciting this week. This is a huge breakout. Should it be able to hold? Tencent's a great catalyst. And as we know, that comes over to the HSI here, the Hang Seng, looking for it to go through 17.4. It really does look like this island reversal down the bottom and potentially Chinese stocks are heading in the right direction towards a big turnaround. We'll be watching very closely on the channel. US 30 doing absolutely nothing. The Dow is sitting at resistance, nothing to report back there. US 2K, you'll notice again, weakness. We know has to get through 2103 to find anything good. And we know that buyers are sitting around 2040. So it's basically just chopping. The longer it chops, the more it coils, the better it gets for a day trade / investment in the future because it's burning time at the moment. Qs, could they make it to 460? Certainly could. This is pretty much going to synergize well with that 5440 on the S&P 500. That's what people are looking for. And it's slowly melting its way up, similar to every other time. As we know, that kind of 9-10 trade days is normal. NASDAQ, I've done a little bit more analysis here. We've got the trend line. We've got the anchored VWAP coming down. We've got the daily 20 coming into this point here. We've got big heavy trade zone coming into this point. Again, 5400, 5440. Watch the SPY if you want to trade this NASDAQ equivalent. So at this point, we're still thinking it looks a bit more bullish than bearish. And now let's move over to Bitcoin. So live, we discussed this place here as a potential buy for Bitcoin. And you'll notice it got a little scary, held the lows, and then rallied back up to a high. This is a very small time frame. It's only 10 minutes, but it's a pretty important level for it to hold. And Bitcoin so far has been able to hold that area. As you'll notice, 61.8 fib, we expected weakness there. I'd like to see it find strength again and breach to a new high. That will be a huge deal. So make sure to set up your 62.8 kind of resistance zone breaks because that should push, I believe, a new all-time high narrative starting to come through. And yeah, we're still bullish on the crypto market. So the crypto market's still looking good. Ethereum looking good. It's still struggling a little because you can see here, but you don't really need to be worried until it goes under 25.08. So at this point, it's made a higher high. We just don't want it to make a lower low. That would be quite negative for the market. So consolidating, waiting again, I believe, for PPI and CPI. And when do they come? 8:30 a.m., less than 24 hours, we get PPI. Then we get the CPI Wednesday at 8:30 a.m. And then, of course, we have retail sales on Thursday. This week's no joke when it comes to trillions of dollars of expiration. It comes to, of course, everything to do with this massive news. So make sure to subscribe if you enjoy the channel, guys. Make sure to follow us over on X for the latest updates. And, of course, if you're interested in anything else that we provide, sign up for free or, of course, join one of our courses. Today, we've had quite a few good trades that have gone through. In particular, of course, oil and silver is live at the moment. Let's see if they can work out. If you're interested in finding out more about that replication, Day Trading Masterclass is the pick. Thanks so much, guys, and bye for now.